According to a recent report by Knight Frank, October data indicates signs of stability for the UK housing market. The report states that while current conditions remain challenging across the sales market, surveyors responding to Boric's September sentiment survey saw improved conditions ahead if rates are held. The 12-month sales expectations series returned a net balance of +3%, up from -5% in August, signaling more stability ahead. The net balance is the proportion of respondents reporting a rise in prices minus those reporting a fall. However, the report also highlights that the UK residential property market remains subdued. Transactions nudged up 1% in August to 87,000 but remained 17% below last year's monthly transaction average. There is little momentum with mortgage approvals for purchase, a leading indicator of demand, slipping 8% from 49,500 in July to 45,500 in August. The reduction in demand is keeping downwards pressure on pricing. The 3-month change to September in house prices was -0.8% according to Nationwide, while Halifax registered a drop of 1.8%. The lenders put the annual change at -5.3% and -4.7%, respectively. I am taking a moment to thank you for subscribing to my channel. Your support motivates me to create more content that you'll love. I'd also like to encourage you to leave a comment and let me know what you think of the video. It is worth noting that the cost of borrowing has been volatile this year and has put downwards pressure on house prices and transaction volumes. The 5-year swap rate dipped below 5% in September, but that compares to a figure of less than 1% 2 years ago. However, some stability appears to be on the horizon. We now expect UK house prices to fall by 7% this year, more than our forecast of -5% in March. Next year, we expect prices to fall by 4% as the economy stabilizes and sentiment improves. Lettings outside of prime London remained a story of demand outstripping available supply. Data from Rightmove underlined this, with the average rental property across the UK receiving 25 inquiries from prospective tenants to letting agents in September. This is more than triple the 8 received on average before the pandemic in 2019. Prime London sales. The Bank of England paused its cycle of interest rate hikes in September, but demand for residential property remains fragile in higher value postcodes in the capital. While the number of new prospective buyers in London rose 12% between August and September as this year's autumn market began, it was half the increase experienced in the previous 2 years. Essentially, the prime London property remains in a holding pattern. It has not experienced the extent of price declines seen across the UK, but neither have the capital's more affluent postcodes been immune from the deteriorating economic sentiment. Prime central London experienced a 1.7% fall in annual values in September, with prime outer London experiencing a decrease of 1.4%. Prime London lettings. The downwards trajectory for annual rental value growth in prime London markets continued in September as supply increased and demand held steady. The number of new prospective tenants in prime London postcodes was flat compared to the 5-year average in the third quarter of this year, our data shows. Meanwhile, listings in prime central London were only 12% down, according to Rightmove, a figure that compares to the decline of 37% in the same quarter last year. Annual rental value growth in prime central London was 11.2% in September, which was the lowest figure in 2 years. In prime outer London, an increase of 10% means that next month we are likely to be back in the single digits. Thank you again for your support, and I look forward to sharing more videos with you soon.